Hello, everyone, and welcome to the new edition of CEO and Market Expert Interviews. I'm your host, Lucian. Some of you know me as Triangle Investor from X. Today, I'm joined by my returning guest, Mr. Per Jander. Per is the director at the WMC, and as a technical advisor, WMC advises Sprott Asset Management, the manager of Sprott Physical Uranium Trust. Per, welcome once again to my show. It is great to have you.
Hi, Lucian. Great to see you again. I'm happy to be back.
Thanks, mate. Per, let's start with the spot market, an overview of the spot market for this year, 2024. We are almost in April now, so how are we looking with volumes? Who are the most active buyers and sellers? Give us some details.
Yeah, it's been a couple of curveballs this year for sure. I mean, we had a really eventful end of last year, I would say, from WNA in London until January. 50% from $60 to $90, and
Yeah.
sure. And as we ended up this year and started into this year with the when the Kazatomprom have obviously said back in October that we're going to ramp up production. We're going to go from -20 to -10% of subsoil use agreements, which translate to 7-8 million pounds. So obviously that had a little bit of a damping effect in October, but only for about a week. And then the overall fundamentals, I would say, just kind of took over, and we kept on marching all the way up to $90.
Yeah.
So then 2 weeks into January, when they came out with the announcement that, we're probably not going to meet these targets. They didn't put any numbers on it, but they did come out with that announcement. And that almost, I would say, set the market more or less into a frenzy. And we had that extra push up to about $105, $106. And that was just sort of a warning that, we have an earnings call here in early February. And then we'll put some numbers on it then. So February rolls around, they have the call and say, we're going to miss it so we're basically going to be flat from 23. So that means a shortfall of about 7-8 million pounds. Other than that, we're going to fulfill our deliveries, everything else. Of course, a very green day in the market. It's like very bullish sentiment. And then about a week after that, everybody was waiting for Cameco. And I'm not really sure where the sentiment came from, but I think some in the investment community, at least you heard a lot of voices around it, saying that they were expecting something similar when it came to issues with Cameco. So there was quite a lot of expectation. Cameco was out, and in my view, they had a very good call. They like, our production assets are working the way they should. Our problems are behind us. We're gonna meet our targets, and they got completely slammed. Not only did Cameco get slammed at 5 or 6%, even the market overall got slammed. So there was a lot of expectations, obviously, and I think, and it obviously having gone from $60 to $106 in, say, 6 months. Clearly, it felt not necessarily inflated, but it was on very small volumes. They ran up on very small volumes. So is a pullback natural at some point? Absolutely. And maybe this was the trigger that, all right, maybe we're not so sure. Maybe it's best to take a little bit of profit here. And for new investors, it's like we've noticed that too in talking to investors over the last 2 months, that some of the contrarians, the really early investors that went in, 2.5 years ago, they've been taking some profit because last year was pretty rough on a lot of people. So if you had some of your uranium investments that were looking pretty good in your portfolio, it was a good time to take some profit. And I think that even continued into this year.
Yeah.
And then you saw a rotation into more general investors, and they, of course, they're new to the field. Cameco has a great earnings call, and then they, of course, the people start looking at, well, the spot market is 90, but their average delivered price is something very different.
Yeah.
So people are scratching their head, and it's like, I think Grant Isaac does a very good job of explaining why is this, and sort of, it's more of a longer term play. Cameco is not very active in the spot market. They focus much more on the long-term contracting. That's where the value for them is. But if you're new to the market and you're impatient, it's not going to look great. So I think we had a bit of a reaction of that. And I'm going through all this equity stuff because it also had the direct impact on the spot market, because the majority of the demand in the spot market has been driven by investors.
Exactly. A long story short, it was a healthy pullback, and it was based on a low volume.
Very low volume. It's almost like the volumes have almost fallen off a cliff. And
Yeah.
I would say as well as like when you look at utilities, because there's obviously there's a lot of utility activity right now. And there was some utility active buying in the spot market during Q4 and even early on in Q1 as well. When prices started getting up above $100, I
Yeah.
think most utilities pulled back and it's like, all right, this is feels a little inflated, right? And it's gone very fast. We're better off focusing on long-term tenders and not try to get short-term approvals from our management and buy at these prices.
Yeah.
So they kind of pulled away from the spot market, but we've seen a not a ramp up. There's been a lot of activity in the term market. Even last year, I think the numbers was fairly high. Still not a replacement rate, so I think we'll see even higher numbers this year.
Yeah.
But there is a lot of utility tenders. Like I've been running around. I've been in Europe 3 times. I've been in Africa 2 times over the last couple of months, talking to utilities, and they are very, very active in the long term market. So you see them rotating away from the spot market, doing a lot of term contracting. These tender processes take a long time, and then when the spot market then came down from 106, buyers disappeared. Buyers strike, John Champaglia calls it, and I because investors didn't want to buy anymore. They were a little uncertain things are going. Utilities will take a pause on this. We'll focus on the term market. And then so market starts falling, of course. And then when you're in the mid 80s, I think it would make sense for utilities to buy there, but then it like for them to pivot again and go back into the spot market, their management might asking like, okay, guys, yeah, like you got to have a plan here, or it's like utilities are just not built up for acting that quickly. At least the majority of them aren't. And I think in a way that's a good thing, but of course it's with hindsight, it's always 2020. It's like, oh, we should have picked up there. We should have not have bought there. But utilities just don't work on that time schedule. They're in the multi-year business, and it's just a very different business model they have.
Yeah, but that said, you and I was talking October, I believe. It was a tight market back then. In the meantime, probably it become more tight than before, right? So it's tight at the moment.
Oh no, it's very tight right now, and it's of course when you don't have any activity, there's constantly material trickling into the market, whether it's offtakes or whether it's inventories that someone needs the money for something else, so they want to liquidate a little bit of inventory. So when you don't have any activity at all, it slowly starts to replenish. But we spoke to a trader last week. They bought £1 million in a week, and it was like you saw the market come around. Like, and this is not in the open market. People don't know about it. They're very likely acting on someone else's behalf. Not going to speculate on that, but it's someone I trust a lot anyway, and
Okay.
they don't make things up. So the buyers are coming back. £1 million, yes. So the buyers are coming back, and whether those pounds end up with the trader or whether they end up, I think in the end they're going to end up with the producer. I'm not going to speculate on who that producer is, but I think they are anyway.
Yeah, that brings me to my next question. What volume actually can be secured for the short-term delivery, 60, 90 days? I mean, where do buyers draw the line and say, okay, this amount is impossible to get for a short-term delivery?
I mean, it depends on how much time you have. If you ask me like, oh, you have to buy £1 million for delivery 30 days from now, you have to buy it this morning before lunch. I
Okay,
mean,
but
I don't
60,
know if I can
90.
do that. And I would have to, if I could, I would have to pay for it. I mean, I wouldn't say it's impossible, but we would be well into the mid 90s in that case, probably higher.
Sure,
But most of the time, it's very rare that a buyer is so under such pressure to buy it. Like if you're going to buy those kind of quantities, make sure you have a week, make sure you have 2 weeks. And most of it, if you're a utility, you certainly do. And even for us, for WMC as an intermediary, if we need to buy those kind of quantities, well, we wouldn't show a price to an end user until we have at least a direct line of sight to some kind of price where it is. Because an interesting factor now is too, like obviously the spot price is close to $90. And the spot market itself is obviously very thin, just like you mentioned. And a lot of activity is focusing on the term market, but where there is a very large shortage, not just 24, but 25, 26, 27. And the producers who do have material at those levels, right, in that time frame, and Cameco and Kazatomprom are both sold out, but they can say like we obviously have some capacity 28 onward. So if you need material for those first 3 years, well, we can source them in the market, or they can take a little bit of risk and I say, we'll offer you, but if you want these 3 years, you need to buy a 10-year contract. And then there's enough margin in that contract that, you know, Kazatomprom and Cameco can take on a bit of risk. They will source it in the market, but they can handle some of that risk. And of course, it's kind of having a short position. If you need to go and buy in the market and the rest of your portfolio benefits from that, you're still fine, right?
Got it.
But we have noticed that there was at a point when we were close to the mid 80s that we could be competitive with a carry trade. So you can buy at 85, you can find someone to finance it for you at, you know, 8, 9, 10% and sell it. And you can still be competitive. You're very close to winning business. And that tells you something about that midterm market.
Definitely. You mentioned tenders. How is the situation with RFPs? I'm hearing some are well in 2040s.
They are. I mean, there's especially one that's that's due now. It's probably very close to where you are. It's from 26 to 39, so that's 21 million pounds total, I think. It's obviously, and it's not a large utility. It's a quite small utility, but it's almost all of their needs. So normally you would see a tender of that size. It's one of the really large utilities, but in this particular case, it's actually a fairly small one. But we have another handful of tenders as well. Most of them are 26, 27, 28, and 5 to 7 years onwards, I would say. So those really long ones, they're quite rare, but they could also, these are the open tenders. I mean, if I was a large utility and I wanted to contract out to 2040, I wouldn't put that out there in there. I would call up Kazatomprom and Cameco and go and let's have a strategic conversation. And that would never be seen in the market until after the fact. Cameco or Kazatomprom might say that we contract for this amount of volume, or it will just show up in their contract book as in pounds on their contract. They might not even be an announcement of it.
Okay, let's move more to a long-term market segment. How are we looking when it comes to contracting at the moment?
How are we, excuse me?
How are we looking when it comes to contracting?
Oh no, I mean, it's as busy as I've ever seen it. It's like I'm running around to the utilities that I call on in Europe, and my American colleagues in the US market extremely busy as well. So it's an ongoing flow, and we hear new one, like, so say there's at least 6 of them active right now across not just U308, but it could be UF6 or UP. So, but at least U308 is contained in it. And there are more coming in the next few months here, and I'd say the next 6 months we're probably looking at another 6. So it's as active as I've more or less ever seen it.
So we can expect speeding up even more in the remainder of 2024.
I would think so, yes.
Okay, that's great to hear. Can you tell me now in 2024 that utilities are fully aware of the supply gap, or there is some still opposition or different opinions from them when it comes to future supply-demand outcome?
I mean, say if all utilities think and act the same, it's not like they're
Probably
very
not.
different utilities have different strategies. But
but overall,
but I would say the best indicator of this is seeing that junior miners, like a Paladin, like a Boss, like an Encore, they're writing contracts with utilities. So these are assets that are not necessarily in production yet, that are getting backed by utility contracts from starting from now or whenever they get into production. That's a very good sign that obviously utilities are looking at that. Yeah, we need these new assets to come online. So to me, that's acknowledging that there is a supply gap. And some utilities are very responsible on this, and I think they get awarded for it too. Of course, they'll get discounted price. You get a lot better price from a miner that is not in production yet because you're absorbing some of their mining risk. But I think it's a good move for them, and I think they get awarded for it.
What are you hearing and seeing when it comes to agreements with ceilings and floors? In which range are they at the moment? I mean, the agreement signed recently in the last, 6 months.
They've moved quite a lot from 6 months. I think in the fall we were talking of maybe an $80-90 ceiling. And this is mostly you get this information from Cameco because everybody else is fairly tight-lipped about it, but at least Cameco mentioned something on their earnings calls. And so they were maybe at 80, 90 during the fall, but then I spoke to Grant in January, and I believe they said it on their earnings call as well, that the offers they were sending out in January was $130 ceilings. And I think that's very reasonable. So it's very likely that, and the floor price was probably in line of where the long-term price was at the time being. So that also tells you something, that if Cameco manages to have an impact on the term price of uranium by saying, hey, we're writing contracts with floors at these levels, that also tells you something about where the market is, I would say.
Mm-hmm. Per, you covered Kazatomprom part real good, but I have to ask you that. What volumes can be expected? And I mean, the volumes that Kazatomprom will take off the spot market, and in which time frame?
It's very hard to tell. I mean, obviously there is, from their announced production from last year, there is a shortfall. There is a 7-8 million pounds shortfall. Have they sold all of that? I don't know.
Yeah.
Can they talk to some of the customers and defer deliveries? I mean, that would be my first port of call. I know we did that at Cameco when I used to work there, and we had some kind of production issues. You go to your long-term customers and you ask, hey, can we defer this? Put it at the end of the contract. We'll obviously cut you a bit of a break. So I would think that Kazatomprom is doing that. Will they buy in the market? Possibly. I think it's quite likely. Might they buy directly? Probably not. They might have some intermediaries who do it on their behalf. There is also the I haven't heard much about ANU, the investment fund that Kazatomprom was going to launch. It's been awfully quiet, and obviously that sits on 2-something million pounds. So I mean, it's not impossible that ends up with Kazatomprom. There's a big industry event coming up in about 3-4 weeks from today in Kazatomprom. Oh, sorry, in Kazakhstan. So the entire nuclear industry will be there, and I mean, to see and hear anything, what's going on in Kazatomprom, how are they looking, what's the sulfuric acid shortage, is there a shortage, is it more that the prices are too high? And in talking to Kazatomprom, I mean, it's like I respect these guys immensely. They're very commercially savvy, and there was a big investor conference in Florida in February, the BMO Metals and Mining Conference, and a lot of investors who sat down and talked to Kazatomprom, who I then spoke to afterwards. It's like, yeah, we said, like, some of them said, like, yeah, because they won't really give you a straight answer. We don't get any feel for this. But some of them said, like, yeah, no, it seems like it's actually, it could well be that it's they're taking a value of volume approach because, you know, we're being held hostage by the sulfuric acid suppliers. They're tripling their prices. It's still 60% of their operating costs. So you don't want to, you know, it's going to impact your bottom line. I'm sure obviously you're gonna make money just fine at $100 a pound, but you don't want to set the precedent and pay that much money for your sulfuric acid. So if we produce a bit less, price is clearly going to be higher because an 8 million pound shortfall is, you know, it will have an impact on the market. So they just, we'll leave some of the pounds in the ground. We get the same revenue. It's not impossible, but I can't comment on it. But I would say it's not that there is some conspiracy theories. It's a much bigger picture, bigger problems going on. I can't substantiate that at all. I don't think so, but clearly it's one of the most interesting topics that I want to focus on, that I try to focus on and find things out about, is what's going on at Kazatomprom, because everything else that goes on in our industry is not irrelevant, but it's very small compared to that. Like whatever happens with Kazatomprom's production, not just in 24, but 25 is almost more important, because they didn't say anything. They were supposed to come out with some indicative numbers on March 15 call, but they pushed it out, right? So now it's August. So now it's all eyes on Kazatomprom. That's they're a big player, and they're a very important player.
Agreed, 100%. Per, I have a few questions from my followers, and then after that we will wrap it up. First question, what should or how can term contracting reporting by individual producers be modified to promote pricing transparency in the EU market?
Yeah, that's a very good question. I mean, as it is now, any kind of price reporting is voluntary, right? So some companies have it as a policy, like Cameco. They say like whatever we contract, we'll let you know the numbers. They obviously don't publish all details around it. They can say a price level, but it's also a little opaque because there's so many different factors that sort of that has an impact on your term price. There's a if you have a split between a base price and then you have some index related pricing, there's a floor and the ceiling. The floor and the ceiling is not reported. The base price is, but then there
Yes.
could be a discount on some of the index related stuff. So there's so many levers you to pull that it's very, very hard to get a coherent picture. I think the price reporters are doing what they can to levelize it, but yes, some producers are riskier than others. So clearly, if you have a Cameco getting one price, I don't think a junior that's not in production yet, that's clearly not going to get the same price. But here's a price they reported because they were price. It's clearly going to be much lower than what Cameco did because that price also includes the mining risk and the development risk.
Yeah.
So it's a tough one. It's a very good question, and the spot market is opaque as it is, and the term market is a complete blur to that. So it's very, very difficult, and we're in the middle of it with WMC, and we're sending out offers and just seeing what responses we get. So we tend to find out that way, but it's like you have a blindfold and you're just poking in the dark essentially. Unfortunately there is no better way today.
Yeah, I have a question from Ray. Is there any official or unofficial estimate of above ground inventory in the world that are not in the books?
That are not in the books, I find it. Yeah, no, but I find it very. There was a period in January and we were up over $105. We saw about £500,000 come into the market from a Japanese utility that had been impacted by the recent earthquake there. So they had to push out their restart by a year, and then clearly that's about £500,000. So that found its way to the market. Does
That
it make
wasn't
sense?
in
Like,
the
of
books.
course, it makes all the sense in the world, but it was only £500,000 and it was $105. So if that's what it took to get £500,000, and we had been at that level for at least a little bit, and we did not see any other inflow of unexpected supply. So to me, just shows that there is not a lot of inventories out there.
Definitely, definitely. Enzo is asking, with the spot market price of uranium becoming less significant than the term price, has the Sprott Uranium Trust, whose value is based on a proprietary composite of U3O8 spot prices from UXC, S&P Platts, and Numerco, become a less attractive investment with more limited upside than previously thought?
Um, Good question, but I would say no, because I mean, there can be a connection between the spot price and the term price. It's just if the carry trade is there. So far, it hasn't been, because then if the spot price pulls away too much from the term price, you just can't do a carry trade. And then you don't have the intermediaries who then, like us, who buy in the spot market, hold it, and sell it in the term market. That connection hasn't been there because it's been a little too steep, or sorry, backwardation almost. And in backwardation, you can't do it. So if you're in backwardation, probably not. But we are seeing the term price is obviously moving up. And considering that really window now with the next 3-4 years when the market is so short, and there's no relief in sight. I don't see where the supply is going to come that's going to relieve this. For the next 3 to 4 years, I see there is significant upside in the spot market, and I would not say that the spot or any other physical vehicle, for that matter, has any less attractiveness now than before.
Okay, final question from Malik. What is the end game for SPUT? You can stay in the same format forever. Could we see a change in the format?
That's again, that's completely for Sprott to comment on. I'm just a technical advisor, so I inventory, so I won't really speculate on that. But there is no end game for the time being. There is no end game. There is it will be there in perpetuity. Sure, there's been discussions on redemption features, and they flare up every time there is a significant discount. But now we're back to 2-3% discount. Hopefully, we'll get to a premium and manage to raise some more funds to buy more uranium. But there is really no end game in sight. But I will really encourage you to get Sprott, to get John Champaglia on, and you can definitely ask him that question. I don't know if you will say anything different, but at least you hear it from him then. So
Yeah, good point. Okay, that was Per Jander. Per, thank you very much for coming to my show. It was a great chat as always, and we will catch up again sometime soon. Thank you.
definitely, thanks for having me again, Lucian, and I'll talk to you soon.